Hey everyone, and welcome back. Today we're diving into Lucid Group's Q4 2024 earnings call.
Definitely a lot to unpack.
Right.
Some impressive sales figures.
Oh, yeah.
And a pretty big leadership change, too.
Exactly. So are you ready to break it all down? See what it all means for Lucid's future?
Absolutely. I think this is a pretty pivotal moment for Lucid. They're kind of at a crossroads here.
Yeah.
Transitioning from a startup, focused on launching that first vehicle,
Right.
to a company aiming to be a major player.
Totally. And that transition is clear right from the start. The big news is founder Peter Rawlinson stepped down as CEO.
Yeah.
COO Mark Winterhoff is taking over as interim CEO for now, and they brought in a new CFO, Taufik Bousaid. What are your thoughts on all this?
It's definitely a surprise Rawlinson wasn't even on the call to discuss the transition.
Yeah, that is interesting.
That said, Winterhoff has been with Lucid for a while now.
Right.
He knows the operations well. Bringing in Bousaid with his background in scaling businesses and financial discipline, that might signal a shift towards a more measured approach to growth.
Makes you wonder if this is maybe a response to the turbulent EV market we saw last year.
Could be. But even with those market headwinds, Lucid had a really strong 2024.
That's true.
Record deliveries 4 quarters in a row, almost doubled their gross margins year over year, strengthened their balance sheet.
Yeah. A big part of that success has to be the Lucid Air.
For sure.
Remember that stat we talked about?
Yeah.
Outselling Mercedes, BMW, and Audi in their category in the second half of last year?
Oh, yeah. That's a big deal.
It shows they're really capturing attention.
Totally. And what's interesting is they're not just winning over EV enthusiasts.
Right.
They're getting traditional luxury car buyers to choose the Air over gas-powered models. That suggests they've hit on a really good formula.
Yeah. Speaking of hitting the sweet spot, let's talk about the Gravity.
Their SUV.
Yeah, their upcoming SUV pre-orders are already exceeding expectations. Over 3/4 of those orders are from brand new customers.
Wow.
There's a lot of excitement around this launch.
For sure. What's really interesting, though, is that customers are choosing those higher-priced Gravity configurations.
No.
Many of them are going above $120,000.
Really? So they're attracting a clientele willing to pay a premium.
That's what it looks like.
Interesting. They're really leaning into that luxury positioning.
Yeah, with their new compromise nothing tagline.
I like it. And it seems to be resonating.
For sure. They're emphasizing the unique features like that spacious 7-seater option.
Right.
And their industry-leading range and technology.
Not just a luxury SUV. It's a statement piece.
Exactly. A symbol of sustainable luxury.
It'll be interesting to see how their marketing push plays out this year.
They've got that event in New York City coming up.
Yeah, a few weeks. With all this positive momentum, though, they do have their challenges, right?
Of course. Production constraints will likely continue through the first few quarters of 2025.
Okay.
They're focused on maintaining quality control and making sure those suppliers can keep pace.
And they're also factoring in potential policy changes like new tariffs, which could impact their bottom line.
Absolutely.
Yeah,
But they are being proactive about it.
they are. Their 2025 production forecast is still pretty ambitious, aiming to produce around 20,000 vehicles.
That's a big jump from last year.
It aligns with their goal of becoming more than just a car company.
More like a tech powerhouse.
Exactly, licensing their tech to other automakers.
Right. And they're actively pursuing those deals.
Yeah.
Particularly for their advanced powertrain tech, including the new Atlas motor.
It could be a game changer for them.
Absolutely. Maybe even open up new revenue streams.
Totally. It's like they're aiming to become the Intel inside of electric vehicles.
That's a good way to put it.
They're also moving forward with expanding their midsize platform.
The first vehicle is scheduled for production in late 2026.
Wow. And they've already greenlit the engineering phase for 2 variants.
It seems like they're really playing the long game here.
They are. Okay, so we've got a new leadership team, a successful flagship sedan, a highly anticipated SUV launch, and ambitious plans for the future. That's a lot to think about. But before we get carried away, let's take a closer look at those Q4 2024 financials.
Yeah, let's dive into the numbers and see what they tell us.
Exactly.
Let's do it. Should be interesting. All right, so let's start with revenue. Lucid brought in $234.5 million for the quarter,
Okay.
mainly driven by Air deliveries.
That's a solid number, over 3,000 vehicles delivered in Q4 alone.
Right. It shows that those sales are translating into real revenue growth.
They are. Now, what about gross margins? That's a big one in the EV world.
Huge Lucid saw significant improvement in 2024. Their GAAP gross margin came in at negative 114%.
Okay.
a big jump from the negative 225% they had in 2023.
Still operating at a loss, but heading in the right direction.
Absolutely.
No.
What's their outlook for 2025, though?
Yeah, what are they projecting?
They're saying continued improvement, driven by increased production scale, their product mix, and ongoing cost reductions. However, they do expect margins to be relatively flat in the first half of the year.
Oh, less optimistic than I was hoping for. What's causing that?
It sounds like some one-time incremental costs associated with that Gravity production ramp-up.
That makes sense.
But they do anticipate significant margin improvement in the second half of the year.
Okay, so short-term bumps, but positive long-term outlook.
That's what it seems like.
Got it. Now let's look at their operating expenses. What about R&D spending?
Sure. Their R&D spending for all of 2024 was $1.18 billion,
Okay.
up 26% year over year, primarily driven by investments in the Gravity.
Right.
But their R&D spending actually dipped in Q4,
It did.
down to $280 million from $324 million in the previous quarter.
So it seems like a lot of those Gravity R&D costs are behind them
I think so, but they do expect it to climb again in 2025.
as they invest in the midsize platform.
Right, and the new Atlas powertrain.
Okay, makes sense. What about SG&A expenses?
For 2024, SG&A came in at $901 million.
Okay.
That's up 13% year over year. And in Q4, it was $243.9 million.
All right, so both R&D and SG&A are going up. Are they managing those expenses effectively, at least?
I think they're doing a decent job. They talked about their efforts to control operating expenses. Even with all of those growth investments,
Okay.
they expect operating expenses as a percentage of revenue to improve by over 100 percentage points this year.
That is reassuring. All right, let's talk cash. Where do they stand at the end of the quarter?
They ended Q4 with $5.08 billion in cash equivalents, investments, and equity securities.
Wow.
That brings their total liquidity to about $6.13 billion.
That's a lot of cash. It should give them plenty of runway to execute on their plans.
It should. And remember, that doesn't even include potential future funding.
Right, from sources like the Saudi Industrial Development Fund.
Exactly, or even those grant programs from the Ministry of Investment of Saudi Arabia.
Their financial foundation seems really strong.
Mm-hmm.
What about capital expenditures for 2025?
They're projecting about $1.4 billion in capital expenditures for the year.
Okay, and where's all that money going?
Well, they're going to use it to expand their AMP2 facility in Saudi Arabia.
Yeah.
They want to transform it into a fully operational vehicle assembly plant. They'll also be setting up Atlas powertrain manufacturing at their AMP1 facility and continuing to build out their retail infrastructure.
That's a big investment, but it makes sense.
Yeah,
They need to expand their production capacity.
their global footprint.
Exactly. So we've covered a lot with these financials. What are your main takeaways?
I'd say that Lucid is demonstrating financial discipline as they scale.
Yeah, their revenue is growing, gross margins are improving, and they have a ton of cash to fuel those expansion plans.
Exactly. They're not profitable yet, but they're making tangible progress toward that goal.
And they're making the right investments in production capacity, technology development, and brand building.
All of the areas that matter most.
And we can't forget about that tech licensing strategy.
Yeah, if they can make those deals work, it could really boost their revenue and speed up their path to profitability.
It could be a game changer.
Mm.
So they're in the luxury EV space, which is getting more and more crowded.
It's very competitive.
How do they differentiate themselves?
I think their focus on cutting-edge tech is key.
Their powertrain and battery systems.
Exactly. They're constantly pushing the boundaries of range, efficiency, and performance.
And remember, the Air actually beat those gas-powered competitors last year.
It did. That says a lot about their ability to compete.
Yeah, they're winning over people who might not have even considered an EV before.
Yeah.
So what about those policy changes we mentioned earlier? How might they impact things?
Well, the biggest one is probably the rumored removal of that $7,500 commercial clean vehicle tax credit.
Right, the one for leased vehicles.
Yeah, that could definitely have an impact on demand, especially for those higher price models.
That's a valid concern. But it seems like the Gravity is attracting buyers who aren't as worried about those incentives.
That's true.
And Lucid is taking steps to mitigate the impact.
Like localizing their supply chain.
Right, they've already secured deals for key components like graphite here in the United States.
Smart move. It helps them navigate those regulations and gives them more control over their supply chain.
Which could reduce costs in the long run. Okay, so they're addressing those policy concerns.
Mhm.
What does all of this mean for investors?
Well, I think the main thing is to understand that Lucid is a growth company. They're still early in their journey.
Meaning there's risk, but also potential upside.
Exactly. They're not profitable yet, but they are moving in that direction. They have growing revenue, improving margins, and tons of cash to fund those expansion plans.
But those plans do require a lot of investment, and there are no guarantees.
There aren't. Investing in Lucid is betting on their vision and their ability to disrupt the market.
Their vision is ambitious: to be a leader in luxury EVs and a tech powerhouse, licensing their technology.
If they can pull it off, it would be huge.
It would. But investors need to have realistic expectations. This is a tough market.
Very competitive. And there will be challenges along the way.
It's a marathon, not a sprint. Let's talk about their plans for that mid-size platform.
Right, that's key to their growth strategy. The first vehicle is scheduled for production in late 2026.
And they've already started advanced engineering on 2 variants.
It shows they're serious about capturing more of that EV market.
Makes sense. The mid-size segment is a lot bigger than the luxury segment.
A lot bigger. It also aligns with their goal of making sustainable transportation more accessible.
Expanding into that segment will require a lot of investment, though.
It will. And it will add complexity to their operations.
They'll need to scale production, expand their supply chain, and figure out how to appeal to a different audience.
And they'll need to do all of that without sacrificing quality and innovation.
A lot to juggle.
Yeah.
But they have a track record of pulling off ambitious things
They built a whole manufacturing facility from the ground up.
and developed some of the most advanced EV tech in the world. So let's go back to their tech licensing strategy.
This is where it gets interesting. They're actively looking for partners to license their powertrain tech, including that new Atlas motor,
They're even talking about licensing their existing Zeus powertrain.
the one that powers the Air.
That's great. It means their tech has a lot of potential.
It's not just for high-end vehicles.
And those licensing deals could really change their financial outlook.
They could. It's a smart strategy. It lets them make money from their expertise without having to build and sell every vehicle themselves.
It's like being the Intel Inside of electric vehicles.
Exactly. But they still have to ramp up production of the Gravity.
They've said that they'll probably be production constrained in the first few quarters of this year.
They are prioritizing quality and making sure those suppliers can meet demand.
And they're putting those early Gravity units in showrooms and test drives,
It's a good move. It lets people experience the Gravity firsthand.
which could lead to even more demand. So they're learning from the Air launch and being more careful this time around.
They are. It's a sign that they're maturing as a company.
So we've covered the competitive landscape, potential policy, changes their strategy, and their challenges.
It's been a lot.
It has.
Yeah.
So what does all of this mean for the future of Lucid?
Where do we see them going in the next 5 to 10 years?
What do you think?
Yeah, I think Lucid has the potential to be a real player in the global EV market.
We're not just building cars, are they?
Nope, they're building a tech platform that could be in a ton of vehicles.
And if they execute their strategy
Right.
and scale production,
To meet demand,
they could really disrupt the industry.
they could even challenge Tesla.
Wow, that's a big statement.
We may be not impossible.
They've already shown they can innovate and get people excited.
For sure. And they're attracting some really talented people.
From the auto industry and the tech world.
Exactly. It shows how ambitious they are.
We're being pretty optimistic here, though. What are the risks?
Well, they still need to execute. They're a young company, and scaling up is hard.
Really hard. And the competition's getting tougher, too.
It is. They'll need to stay ahead of the curve with technology design manufacturing.
Plus, there's all that regulation as governments push EVs.
Right. And there's always a chance their tech doesn't live up to the hype.
Or they can't get those licensing deals.
It's all part of the equation, but you have to weigh the risks against the rewards.
I guess so.
Lucid has a good vision, they've done some innovative things, and they have the resources.
That's what makes them so interesting to follow.
Absolutely.
All right, so we've gone through their financials, their strategy, their challenges, and their potential.
A lot of information.
It is time to sum it all up.
What are the key takeaways for our listeners?
Well, I think the biggest one is that Lucid is growing.
For sure. Their revenues, increasing margins are getting better. They have a ton of cash.
But they are still a young company in a really tough market.
Absolutely. So what will make or break them in the next few years?
That's the question, isn't it?
It is. I think their commitment to innovation is crucial.
They're pushing the limits of EV technology,
And their strategic partnerships are important too.
especially with the Public Investment Fund of Saudi Arabia.
Yeah, that gives them financial support and a foothold in a key EV market.
We also can't forget about their licensing plans,
That could make them a tech giant.
bringing in revenue on top of car sales.
That's what sets them apart. They're not just a car company, they're tech innovators.
Looking ahead, the Gravity SUV is going to be huge for their growth.
The pre-orders are strong and people seem excited.
They're also being more careful with production this time around,
Learning from their experience with the Air.
but they're still facing production constraints.
At least for now.
Yeah.
And those policy changes, like the tax credit going away, could hurt demand.
They are trying to mitigate those risks, though.
By localizing their supply chain and focusing on higher-end buyers.
Makes sense. So what does this mean for investors?
Well, anyone thinking about investing in Lucid needs to understand the risks and rewards.
They have a lot of potential, but it's not guaranteed.
It's a growth company with a big vision.
But they're in a really competitive industry.
It's a bet on their ability to execute their strategy and overcome the challenges.
It's not for everyone, but for some people, it could be a great opportunity.
It's definitely a company to watch.
So to wrap up, we'll leave our listeners with a few things to think about.
All right.
Can Lucid stay on top of the luxury market while moving into the bigger midsize market?
Good question.
Will those licensing deals make them a true tech powerhouse with new revenue streams?
We'll see.
How will they deal with production constraints, policy changes, and all that competition?
And maybe the most important question.
Will they actually revolutionize the car industry and make sustainable transport available to everyone?
Only time will tell, but it's going to be fascinating.
Thanks for joining us for this deep dive into Lucid Group's Q4 2024 earnings call. We'll be back soon with another exciting look at the business world.
See you then.